Good day and welcome to yet another one of our Answers weekly updates. As per usual, what we'll do is go over some things that happened in the last week or so and discuss how it affects you and your investments going forward. We'll talk about three big topics. Firstly, what's happening with the banking situation. Next, it's been a very, very big couple of weeks in the AI. We're going to talk about a couple of those topics. And then finally, we can go a little in depth into what's the latest from the US Fed, the Fed decision, as well as what the forecast looks for interest rates from the world's largest economy. Okay, starting off the banking situation. So some moves were made this week. First of all, we had Credit Suisse, of course, with the UBS tie-up. Effectively, UBS comes in, buys Credit Suisse for pittance, takes over some of that issues. The Swiss National Bank has stepped in and said that they basically going to protect the downside for UBS, so they are effectively getting a free option. If Credit Suisse goes up in valuation, which if it works out, it should. They're buying it for a few billion. When a while ago it was many tens of billions. So there's a huge opportunity here if they can get it right. And if the Swiss National Bank does step in and protect them from any downside, technically all they could use probably is a couple billion that they put in as the investment. So yeah, it's a huge opportunity for them. In the US, we've had more moves with regards to First Republic Bank, which is the next bank that has problems at the moment. There's been a proposal put forward by Jamie Dimon, apparently it involves about 11 banks or so, stepping in to try and fund First Republic and try and get that bank back on track. This is, I think, the preferred way for this to go forward, because it is still saving the bank and saving depositors, but it's not getting the government involved like they were involved with the SVB, that's Silicon Valley Bank. There's a lot of backlash because I don't think people understand fully just what the government is doing when it comes to the banks. There's an idea that with, for instance, Silicon Valley Bank, that the government stepped in and bailed out the bank and bailed out these risk takers. But in reality, that doesn't make sense. If you think about it, if you put money in a bank, you really aren't making a huge amount of return. The people that put money in Silicon Valley Bank weren't going in there for a huge, above normal return. They were getting maybe 1% or 2% because it's US dollars. These were cash accounts. These weren't investments. These were just basically deposits that they wanted to basically have to pay payroll, to do disbursements of investments and so on. They weren't getting some super high return because they were with Silicon Valley Bank, and therefore you really can't expect them to have done the kind of due diligence on a bank with regards to its credit worthiness. The bank, the best you could hope for the bank basically was rated A grade by the ratings agencies. It seemed to be in good standing with the government. There's no reason for a normal depositor, not investor, a normal depositor to have doubted the creditworthiness of the bank. Now, if you're buying the bank's bonds, that's not the story. If you're buying the bank's shares, not the story. You need to do a lot more due diligence. But if you're just putting money at a bank, normally you'd expect that to be, just something that it's like it's money in the bank. Effectively, there's a reason that's the term. Strangely enough, a lot of these guys that were investing here were young people that were, starting their first businesses and so on. That's the Silicon Valley kind of stereotype, and some of them didn't even know what the FDIC limit was. They didn't know how much of their money at the bank was insured. Think about it. If I had to ask, the guys listening to this right now, what's the South African limit for insurance? I would suggest the majority of you don't even know that. What's it in the Eurozone? If you have bank accounts there, you don't know that. This is not something that most people, basically cover or understand in terms of, banking. So, with regards to Silicon Valley Bank, that obviously went down. Big, issue politically, bad taste in the mouth for politicians, and they don't want to have the impression that they're stepping in and giving money to rich people again. So that's why the rescue of First Republic Bank would be better if it is done in the private sector. Next, AI. For those that don't know, the amount of developments in the AI space over the last week and a half has been, by most accounts, spectacular. The stuff that we normally expect to come out over many months, even over a period of a year, is the kind of things we've had come out of the last week and a half. We've had a number of announcements. For instance, Bard, that's the Google's program that's going public. Bing is now got an inbuilt kind of thing happening, kind of a test happening with regards to something that looks quite similar to DALL-E, but a little bit better actually from the things I've seen about it. A new Midjourney. obviously last week we had the GPT-4 announced, which is the upgrade to GPT-3 or 3.5, which is often termed Chat GPT. Adobe came out with an announcement that they are integrating, not just they are integrating basically the graphical stuff, like a DALL-E kind of graphical stuff into their the systems here, but they're also using licensed and non-copyrighted images in their AI, which means that one of the big dangers around AI, which is the issue around copyright, around being sued for using somebody's programming and so on, photographs and artistic work and so on, disappears. So that's a big announcement from them. Nvidia comes out with the latest results, and Nvidia, by the way, if you look at the AI, rush as being the gold rush, Nvidia is the guys that sell the shovels, and as they always say, if there's a gold rush, invest in the guys that sell the shovels, and Nvidia are those guys that make the GPUs behind the scenes that these things run on. And if you look at Nvidia, they've come out and they've said that they're going to basically be offering a cloud kind of service for their GPUs. So if you have an idea for an AI system and you want to get it trained and so on, and you need this massive amount of computing power, and it is large. I mean, we're talking a significant amount of computing power is required to basically train and run some of these systems. You don't have to buy all those things yourself. You can basically rent out time on their servers and train your system, which could be a very profitable, a very interesting thing going forward. These are the kind of developments that have happened in the last, I'd say, 10 days. Like any one of these things would be news on its own, but the fact of the matter that we are seeing also, I mean, I didn't mention that there's a recent development where there's now a text to video service coming out. I can't remember the exact name of the company, but it's a text to video service where you basically can type in a thing, and instead of getting a picture, you get a video coming through. And I've seen that. It's kind of like where DALL-E 2 was. There's some weird things, weird fingers and weird movements and so on, but it's more impressive than you think. Very interesting, very artistic looking. And I think that the same kind of improvement we saw, for instance, with Midjourney and so on, where the first pictures of people looked like monsters if you look closely at them, but now look like perfect supermodels. Quite frankly, the thing where you used to have 3 and 4 fingers, and now you have 5 fingers, that look totally realistic, and you couldn't tell like a hand on the newer versions of these graphical programs, apart from a bunch of real hand pictures. This is the kind of stuff that we are seeing, the kind of improvements we expect to see. And if that's the kind of improvements you see in video, I mean, quite frankly, say next 5 years, that quickly, you could quite frankly make the new Star Wars movie just by typing in a couple prompts into the next version of video / text / whatever it comes out. So yeah, it's really impressive. A couple things to note around this, of course, is that the fact that this stuff is really taking off as quickly as it has does make you wonder whether or not we are still in a situation that's a bit of a false dawn. We've had a number of these false dawns in the past, followed by what's called AI winters, where you have a huge amount of investments coming in, and they basically go through a period where they squeeze as much as they can from the latest technology, and then it turns out it's not enough to get you to the point where you want to be, and then it kind of falls apart. And why I bring this up is as follows. Yes, there's been a lot of developments, but there's also been a couple of setbacks, and I talked about this before. But I mean, we've seen, for instance, like some things have been solved. Chess solved. There's no human being in the world that can come close to the chess program that can run on your computer, in your hand, your phone. If you had the ability to use your phone, you'd be beating Magnus Carlsen, who's considered to be one of the best, if not the best, chess player in history. Okay, the guy won so many world championships. He basically got tired of doing it and retired because he doesn't want to, keep on winning these things. They're too boring to him. But if you had a little, handheld phone like a Nokia, like Samsung or iPhone, you could run a program that would easily beat Magnus Carlsen. Not even close. And we thought that this kind of stuff goes in one direction, but we had obviously the example of Go, where they beat the world's best Go player, and it was done in some incredible moves. I think move 37 was considered to be one of the most innovative things ever done. And then somebody figured out, hey, this machine may win the normal. I mean, if you play normally, but it really doesn't understand the game, and therefore if you go around, it's a normal game and play a strategy that any human would defeat, quite easily, it has no chance. And that's a setback. And it could be the same case here. We could be seeing the chess equivalents in terms of AI right now with ChatGPT and with GPT-4 and Midjourney and those kind of things coming out, and Bard and so on. But quite frankly, maybe there's a limit to how far this stuff goes. Maybe because of the way the programming, the underlying structure of it. By the way, I'm going to do a seminar on this thing reasonably soon, where I'll explain, the different terms and how they work and so on. I'm a bit of an amateur, fan of AI, and so I followed it for many years. So I have the basic ideas behind it. So the way the structure works here is that you basically are filtering this data through different levels of a neural network, effectively, to get kind of weightings on parameters, and they could be huge amount of parameters. We're talking about 500 billion for some of the bigger programs out there, and these parameters basically give you, once you put it prompted, an answer to your question or to your prompt, okay, a response to that prompt. But often it doesn't understand anything about the data set it worked on. Like, for instance, with Go, what they found out was that Go doesn't understand when these groups of pieces are together that they are a group. It has a very weird understanding of how that particular thing works. And we've seen that in the past as well. We've seen, for instance, when people were testing for diseases, so you could scan a bunch of x-rays to see whether or not or scan a bunch of pictures and see whether somebody has cancer or not. And they found that this was very, the program was very accurate when it comes to predicting that. But then they found out that the program wasn't actually looking at the person, was looking at the background and getting clues from the background. So people that were more in a hospital setting were more likely to be, diagnosed with cancer. Therefore, they were able to basically figure out that the program wasn't even looking at the person, was looking more at other things, other clues around that were giving them this information. And this is kind of problem with AI, especially the AI we have right now. It doesn't understand anything. It usually just is giving you the most statistically likely, answer from the data it's been trained on. That lack of understanding may have real, long-term consequences, because it could mean that you don't have the ability to get to the next level of AI. And that the stuff that we're seeing right now is, like I said, with chess. It's perfectly good doing pictures that are, interesting and whatever, but it may never be able to go to the next step and give you realistic answers and real, trustworthy answers with regards to prompts and questions that you may put through to it. And that could be something that we don't know yet. Okay, finally coming over to what's happening with regards to the US Fed and Fed policy. This week, Jerome Powell came out and gave us the latest interest rate hike from the US. Came in at basically 0.25%. Expectations were 0.25%. Before we had the crisis with Silicon Valley Bank, the thought was between 1/4 and 1/2, and people were trending towards 1/2. When the latest announcement was done, it was 1/4 or 0. So the bank basically crisis has given us, or given the Fed at least, some reason to pause, or some reason to be concerned. And so they've brought down what they would have done probably otherwise. Now, what should we learn from this? Firstly, the US Fed wants to appear as strong as possible. Okay, to understand how the Fed operates, and part of the Fed's power, in fact, a lot of the Fed's power comes down to the fact that people believe when the Fed talks. So if the Fed says we're going to raise rates to fight inflation, that actually causes inflation to be lower than it would otherwise, because people believe the Fed and think, hey, inflation looks like it might be going to 9-10%, but the Fed's going to come and fight it. So let us factor in it's going to be actually 6 or 7%, because the Fed's going to be making that difference. And the Fed makes that difference because it has credibility in the market. So when it talks, the market listens. Now, the Fed can't lose that power, okay? Because if it does, then it's going to be much more difficult to control inflation going forward. So it really has to fight inflation and has to show credibility. Inflation right now in the US is 6%. The Fed's target rate is 2%. They've been very clear they want to get down to 2%. They can't be halting or be shown to be halting or to be balking while it's 6% when they want to target 2%, because that'll destroy the credibility. It's like, someone says, I'll punch you if you do that, and somebody does that and you don't punch them, you lose your credibility, and they're more likely to take more actions against you because they're no longer afraid of you. The same thing with the Fed. The Fed does not respond to a piece of data in the way it should respond. It loses credibility, and the market will not react the next time to a Fed announcement like they should. Okay, so the Fed's been very strong. The question is, will they be strong enough to get down from 6 to 2%? Well, maybe not. Why? We are seeing core inflation rise. We are seeing, inflation, excluding things like energy and food, continue to be quite strong. Now, about half of that, almost half of that, 0.4 of that is made up of housing, and housing may be pulling back. There's serious indications that we are seeing housing pulling back in the US, and that could give us some relief when it comes to core inflation. But will it pull back enough to get down from 2%, from 6%? Remains to be seen. At the same time, wages are seeing some pressure. We have this really low unemployment rate in the US that's going to be causing problems going forward, because eventually people are going to stop being afraid of the recession if it doesn't come up. They're going to be stop being afraid of what's the Fed's doing if the Fed basically pauses or halts inflation, interest rate hikes, and they're going to be saying to themselves, hey, I've had 2 years, 3 years right now where I have not kept up with inflation. My wages have not kept up with inflation. I've had a drop in my real wages over the 2 or 3 years. I need a wage increase, and right now there's only about 3.5% of the population is unemployed, and they cannot find a new worker if I basically make a big fuss. Therefore, I'm likely to get that wage increase. That causes wages to rise. That'll cause inflation to come about. And the Fed basically has to do something about inflation before that becomes a real problem. And like I said, there's already starting to emerge right now. Okay, and inflation, by the way, is not just a problem in the US. We've had one of the biggest, beats in terms of like high-end inflation in the UK. I think it's the worst number they've had in over a decade. That's obviously a huge, problem for them. At the same time, they have a reasonably low unemployment rate, so that's something that they also need to be concerned about with regards to the same reasons that we have in the US, where that unemployment rate that's low and that inflation rate that's high is going to translate into wage increases, which are going to translate into sticky inflation going forward. And finally, around what the Fed has talked about, the Fed did mention, that banking crisis in a way, and said that the banking crisis is going to cause banks to be less willing to lend money out. If banks lend less money out to the population, that is going to give the same kind of impact on the economy and technically on inflation as an interest rate hike. An interest rate hike makes it more difficult for you to borrow money because it's going to be more difficult to pay back, and you don't borrow as much, and therefore you don't spend as much because you have less credit. If the bank decides not to lend you the money, it's going to be the same thing. You're not going to have as much money to spend, and there's going to be less demand in the economy, which will reduce inflation. So there's a possibility that the crisis we've had so far might have enough impact on the banking sector behavior to be equivalent to maybe as much as a 0.5% interest rate hike on its own. Okay, so that could be one way the Fed justifies not raising rates as aggressively as it should. It's the fact that it thinks that the banking sector is going to react in a way that's going to cut inflation by reducing lending and reducing demand. Okay. That's it for me for this week. Thanks for joining me, and I look forward to speaking to you guys again next week. Cheers.